think so, yeah.
Because I just saw the signal drop by like 30 dB. It's like, whoa.
Oh, yeah, it's a fraction of what it was.
Hey everybody, I'm back on YouTube with a new stream. So come rejoin if you want to. And yeah, that was odd. The whole internet dropped at the hotel. It just died. So anyway, back where I was. We lost complete internet. It lost the stream. So we had to make a new stream. Anyway, welcome back. Yeah. Sorry everybody for that hiccup. So we're likely to get this pullback in S5FI, and we'll see what happens. So ES. Maybe we get that tag, higher high. Maybe. We'll see what happens here today. You know, like I said, bank earnings kicking off today. We've got JP Morgan. Looks like pre-market up. We've got market opening in about 2 minutes. We're seeing Bank of America down. We're seeing Wells Fargo down. So is this like a sell the news on banks? You know, maybe banks a little disappointing. We usually see that money ramp into banks and then flow out of banks. So watch for the pullback in banks. As we also circle over to PPI right here on the calendar. Right here. And we refresh Forex Factory. We've got flat. PPI came in flat. I mean, showing. We just keep bumping in and out here. What the heck is going on? And it's just gonna be one of those days, I guess. Maybe it's not a day for live streaming. I'll be back on Monday. We're gonna try to finish this up, try to get through everything before the internet just decides to kill JT today, I guess. So,
You're speaking too many truths.
yeah, speaking too much truth, I guess, yeah. So, anyway, just want to throw the risk out there. All trading involves a substantial risk of loss. Before I talk about some tickers, past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, and entertaining, not a recommendation to buy or sell anything. No stocks, no options, no bonds, no futures, no Forex. Don't long them, don't short them. If you decide to trade, it's on you, all right? I'm not giving personal advice. If you desire personal financial advice, you gotta hire and consult a financial advisor. I'm just kind of out here sharing what I'm doing. Maybe I find some stuff. Maybe you like it. Maybe you do those trades, but that's on you. Don't come finger pointing at me that, hey, all that stuff you said, that was horrible. I mean, come on. We're all grown-ups here. If you're not a grown-up, don't trade with real money. Do paper trades. I mean, it's a completely valid way to build your confidence. I may never get another prediction right again. It may never work. So be careful out there, all right? You can and probably will lose some money trading at one point or another. Now, circle on back. And we had those spot ETFs hitting yesterday. It was it's pretty wild. Pretty wild. We saw a pop. We saw a drop. I mean, Bitcoin, though, kind of sold the news a little bit. For those that were doubting it, be careful. We may get that retrace. This was a big, exciting, unknown event that was waiting out there, and it happened. All right? The halving event coming up later in April is a known event, but that one tends to create this lasting excitement that probably lasts 18, maybe 24 months after that halving event. That's a different kind of thing. That's a supply reduction. Bitcoin spot ETFs was like, there was a lot of hype. There was a lot of buildup. We saw this ramp from like October right into the spot ETF approval this week. And they started trading yesterday. So we saw that ramp right up in there. Now, what's the next exciting thing? Not till April in crypto. So we may see crypto kind of go through this little bit of pullback, a little bit of, less interest. I mean, we do have that window for a lot of those ETFs that got approved yesterday have a window, a discount window kind of, where it's zero fees for the first $1 billion. $8 billion flows into that, into many of those. About $1 billion here, $1 billion there, $5 billion there. At that point, that's a lot of Bitcoin that's going to be bought up. That's the whole point of the spot ETF, is that when the money flows in there, they buy the chunk of Bitcoin, they buy the exposure to the futures, they do all the management. And if you're not sure about a particular ETF, you're like, which one's which? You're going to have to do some research. All right, they're not all the same. Their management style is not going to be the same. It's not just they're buying Bitcoin. There's complicated things they're going to do. They're going to hold some treasuries. They're going to hold cash. They're going to hold futures. They're going to hold actual spot Bitcoin. And they're going to do, this is the way ETFs work, is that they manage their position. It's not just one thing. GLD does that too. If you're like, oh, I'm buying GLD because they hold gold. Well, they manage a gold position. They trade against it. They hold cash. They hold some security, some treasuries with the cash. So it's a complicated thing, and I can't say that it's the same for all. I would never say it's the same for all 11 of these spot ETFs that got approved and started trading yesterday, because they all have different managers. They all have different custodians. 8 of them share Coinbase, but the rest of them don't. So how's that going to play out? Well, for Coinbase, in the room yesterday, we were talking about, it was kind of sell the news. The excitement for Coinbase being a custodian kind of wore off back here at the end of December. And funny enough, we were at extension targets, and it looks like we're retracing right back to the roadmap line. And Coin was on the list today, so way down the list. Now, what was actually moving today? Bitcoin obviously looks like it's still in the channel. If we're actually just straight up honest about it, it's just hanging in that channel. I go back to the screen that actually has the channel drawn. We're just hanging in this channel. Just have to expand it just slightly, put it back where it goes. We tried to break out yesterday. We got slammed back down. We were hanging out right in the middle. We may just chug right in that channel until we break down. And we're highly likely to do some kind of retrace before halving, because it's just human sentiment. Everybody kind of like, it's not fun anymore. It's going to pull back. The rumor mill starts up. And if you really look at it though, you really look at what we did on Bitcoin so far, the low was back here, November 22. This thing is up a crazy 200% roughly. Should we get a pullback? Yeah, we probably should. So just keep it in mind, all right? Just because it pulls back doesn't mean that the world's ending. You got to keep your time frame in check here. If you're trading for this potential rally on the back half of the halving, don't get caught up in what happens before the halving. This will be the buying opportunity if and when we pull back. If you missed out loading up. If you're loading up right now, you're loading up at the top. Be careful. Be careful. All right. Ethereum. Look at that pop. Right up into resistance. I've got a big orange box. Had a big orange box for a while. Can we get continuation? The real resistance is up here at 34 right now. If we come up there and hit 34, I would watch out for that drop. That's the 618 retrace. All right, anything below that, we haven't even gotten up to 618 yet. So big resistance between where we are at 26, 27, and 34. Big resistance. Do I expect it to break out? I don't know. This is a much more bearish chart right now than Bitcoin. So not so sure what's about to happen. Dollar is still in a downtrend, not really doing much. Could we see this flush? If we get back below that trend line, back below that low, we're probably going to see it flush on down. Now, circling back to oil, look at that. What happened last night? Anybody know? Anybody in the room? Anybody paying attention? We started attacking Yemen and starting to whack those Houthis that were attacking the Mersic ships and all the other, ships trying to go through the Red Sea, and we're putting a smackdown. But they released something that said they're doubling down, like we're going to keep attacking ships. So this thing could escalate, and we could see oil do the pop. Right there's the resistance. If we get through it, watch for a breakout and a run higher. We've got higher targets. I mean, did I know this was going to escalate? No. I mean, was there potential? Maybe, but that's not why I was looking long gold. Now, at this point, I kind of want to see this pop up into this possibly $80 area and get a retrace, a nice 618 retrace, and looks something like this, back in that area. And then that's the big load up point where we can explode higher. All right, so still waiting for this thing to prove it. Could it just run from where we are? Absolutely, absolutely. But right now, let's wait for it to prove it, all right? We're breaking out of that little wedge. We could see a move, something like this. When we get those little megaphone wedge things, watermelon seed squeeze, look where it puts us, right up to the roadmap line. That'd be perfect. And then we could see a retrace right back off of that. That would be perfect. But it's not there yet. It's not proving it. Don't just go loading the boat on oil just because of this one event. Wait for it to prove it. The chart is going to give you opportunity, more than likely. Gold is popping too. So we've got black gold and we've got yellow metal gold popping. But it's still just in the middle of the range. Be careful here. Be very, very careful here. 618 resistance right there. Right there. Right at 2067. If we turn down there, very easily hit the roadmap line. If not, get the extensions lower. Be very, very careful. Very careful on gold right now. Nothing's, until we start proving a breakout, we can get a lower flush. Now, interestingly, it does look pretty good that we tried to break lower and immediately rejected it yesterday. Yesterday we tried to break lower, today immediately breaking back higher. That could mean we're breaking out higher, but we don't prove it until we get above this high right here, that we're probably going above this high. So, all right. UCO, yeah, that doesn't have a whole lot happening at the moment. Still down here in the consolidation under the roadmap line, all right? The aggressive entry was above 32. Super aggressive entry was back here when I grabbed it. I'm still holding it. I'm still out months. And if we break out, I'll probably add to it. I'll probably get some longer term position. Right now, nothing's proved anything. All right, conservative entries all the way up at 34.50. And this is leverage. I don't have the leverage button, but be careful on leverage. Leverage cuts both ways. It is an ultra, that's leverage. Anytime you see those ultra, the, things like that are pro, the 1.5x, 2.5x, 3x, we see them all over. When they say ultra, that means leverage. Be careful. One that's not so leveraged, USO, and you can see it's not really playing the game either so far. We're not breaking out. We're still below the roadmap line, still bearish oil. This hasn't proved anything. If you're one to aggressively try to get in, you could do that now, but we may retrace. We probably will retrace before we can break on out. This is not like constructive price action for going higher yet. We can build it, but we haven't got there yet. Netflix, look at that. Right up. Getting near my target. Keeps creeping. I think I have my order at 505, 510 maybe. I'll have to pull up the platform and look. It's been like October, November since I put that on. When I got the share, I put the order on, and 25%. Who says you can't make good money trading shares? I traded, originally I had 5 or 10 shares. Now I've got 1 because I got a margin call. That was just a stupid thing on me, but I kept 1 just to prove that you could make nice return just holding expensive freaking shares. People are like, oh, you can't trade like $400 stuff and make good money. Look at that, I made 25% in since October. I mean, that kind of beats the S&P all year last year, 24.5%. I mean, if I made a little over 25%, I did it in November, December, January, 3 months. That was pretty good. So it depends on what you pick, all right? Stay focused on the good setups. Ignore all the crap. Let's be honest, like the market's full of crap. So most of the time, full of crap. But if you focus on the stuff that can make you money, you don't gotta worry about all the other stuff. So Lockheed Martin popping today, but it's probably popping on the Houthi attacks, honestly. But it looks kind of uninteresting. It's just in that sideways consolidation box. Probably gonna keep going sideways. Sideways, garbly goo. It may say